The No Nonsense Roundtable, a weekly radio show and podcast where host Dom Geneva interviews guests from all walks of life, all with amazing stories to tell. And now, here's your host, Dom Geneva.
Well, welcome everybody to another edition of your No Nonsense Car Dealer, presented to you here on WYSL, WLEA. You can hear us all over the Rochester area and down to the Southern Tier. And all the previous shows, as I like to tell people, are on NoNonsenseRoundtable.com. So I have another one of my perennial guests, as I call them, people that have been on the show for more than once. And now we're running this show, as you know, without commercials. And let me say something else that you guys need to know. I don't take free tickets from anybody or free favors, or nobody's paying me to endorse anybody. So when I have somebody on the show and I say, hey, this is really a good guy, believe me, it's really a good guy. Or I could say like a car dealer, trust me, but I don't use that because of my former career. But I have a fella on the line here on my Zoom call, and his name is George Conboy. Now, George Conboy is the chief fella, if I'll have you use your own title here, George, of Brighton Securities. Now, Brighton Securities, quite frankly, is the only company that I trust my financial business with. I mean, you have a lot of advisors, and everybody can call themselves an advisor, but here's the thing. When I met George and I was considering going and giving my investments, my 401k to somebody who does his business, George made it very clear. He says, now, Dom, we might become friends, and that would be all nice if we become friends, but my job is to make you money. George, yes, I get it. George, welcome to the show. There's a lot of things to talk about now with the economy, and people are, I like Yiddish words, people are a little verklempt about what's going on. I think verklempt is probably a good word about it. And I have my own theories. I like to test them out with you because you're much smarter than I am, obviously. And welcome to the show. So your formal title is, I would say you own it, but it's not like you're chief.
I am chairman of Brighton Securities. And one of the things I try to always get across is I've never wanted Brighton Securities to be the George Conboy show, right? Mm-hmm. We have, I think we have 50 employees. Our headquarters is in Rochester on Monroe Avenue. But we have an office in Batavia, we have an office in Lockport, and in Q3 of this year, we will open our first office in Buffalo. So
wow, that's great.
It's a slow growth story. I've never wanted to grow fast, but I've always wanted to grow.
Well, the thing is that you want to grow, but you want to grow strategically, and I like to call it in the car business gently. So many places expand so quickly because they see some success, and they go beyond their original philosophy of handling people or treating customers and whatever. Sure. And the thing I say about you, I say there's places that get it and places that don't get it. I don't care what business it is. You either get it or you don't get it. I mean, do you have an apple orchard who's going to produce apples for you every year, or are you building a forest where you're going to cut down the trees and you're not going to have that happen? The other thing is, and I want to get this sort of on the table right away about the way you act, is that when I was selling cars, when I had the car dealership, I said that I told my salespeople, cars are like shoes. They have to be comfortable, affordable, a style you like, and you can't return them. So put the customer in the right pair of shoes. Now, there's the golden rule and there's the platinum rule. And we talk about this all the time. The golden rule is to treat people the way you want to be treated. The platinum rule is to treat them the way they want to be treated. Right. And you're very, very, very good at that because you know what my concerns are. You know what my worries are, what I want to craft as a financial plan for me and my family. And you're very, very good with that. You and all your people. So,
if we can't, Dom.
Yeah.
The reality is, if we can't, and if we don't treat people that way, why should they do business with us, right? Mm-hmm. It's a very stocks and bonds and mutual funds and ETFs, investments, that is to say, investments are a commodity, right? And I suppose that if I'm going to buy a Jeep, I can buy a Jeep from dealer A, B, or C. It's still a Jeep. So
Right.
if I can't give someone a reason to do business here, if they aren't treated the way
Hmm.
they want to be treated, I know I'm a crabby guy. And if I'm not treated well as a customer, I don't want to be a customer. So I always remember in my mind, our clients need to be treated the way they want to be treated, or they shouldn't be our client. I can't blame them. So we treat them well.
I totally subscribe to that. I mean, that is the way that you build a business that continues over the years. It passes down from generation to generation, and that there's your apple orchard. There's your apple orchard. And not everybody works the same way. You know, I give them my presentations about how to buy a car. I mean, the cars are all sold to the dealerships for the same price from the manufacturer. So what do you have to do? You have to have some competitive advantage. Well, the competitive advantage, you can make something up. You know, you can make up a tent sale or something like that, or you can actually give somebody better service or whatever. So that's the case. So I use the word maybe verklempt, and we have a lot of things going on in the market these days. There was a um, report on 60 Minutes the other night, how the 1929 crash is going to happen all over again. There's a bubble happening there. I have my own theory about this, but I want to hear yours first, and that and what's happening with the markets, because the markets are doing a lot better than consumer sentiment. I mean, the markets
Yes,
are doing very, very
absolutely.
well. You're making me. You are my friend now, so that's good. But you are making money for me too, and being my friend. So let's get into this. What's going on now?
Okay. So the 1929 crash thing, oh, Dom, I've been in the business, what, 43 years now. I can't tell you how many times I've heard that another 1929 is tomorrow, next week, next month, what have you. In 1987, we had the crash of 87, which was in
Mm-hmm.
October 19th of 1987. The markets were down. Financial markets were down 22% in one day. So checking my notes here, the Dow Jones Industrial Average just below 51,000 today. That would be like the Dow dropping 11,000 points in one day. So
Whoa!
when that happened, yeah, that it was huge. It
Oh
was a huge
yeah!
drop.
Whoa!
So when that happened, of course, we got our news from newspapers and television. That was it. There was no internet or the rest of it. You
Hmm.
didn't look at stock prices on your
Hmm.
phone. And the next day in the Democrat and Chronicle and the Wall Street Journal, you saw charts in every newspaper, and they overlaid the chart of 1987 with the
Hmm.
chart from 1929. And you could see the clear idea was it was going to go like this and then like this. So
Hmm.
in 1987, it was going to be a new 1929. When the tech bubble of the year 2000 burst, it was going to be 1929. The financial crisis was going to be 1929. Maybe they'll get it right this time, but their track record hasn't been very good, Dom.
Well,
Now,
okay, go ahead.
well, I'll give you one more thing. The biggest question I get now from people is, gee, I look at the world and there's the Straits of Hormuz and there's Russia and Ukraine and the Iranians and there's inflation and
Hmm.
gas prices are 4.50 a gallon. And how is it that the US stock market is going up? How can it be? And what I encourage people to do is think about the fact that capital is more mobile than ever. Now, in plain speak, if you want to send some money to your kid who lives in California, you can do it with a couple of taps on your phone. You can buy
Hmm.
things with a couple of taps on your phone. Capital is more mobile than ever. When I started in the business,
Hmm.
you'd have to mail somebody a check. So
Hmm.
capital is more mobile than ever. Then I compare that with a paraphrase of the famous Winston Churchill quote. Winston Churchill said, democracy is the worst form of government that's ever been tried, except for all of the others.
Hmm.
And I think, okay, tell me everything bad about the US economy, everything bad, list it, whatever you want, take as long as you want. And then I'll say, great, okay, those things are all true. Now show me any large world economy anywhere that's doing better. Show me a country or a region where people who live there feel like their money is safer there. In Europe, an economic mess.
Hmm.
In China, a banking system fairly close to collapse. In Russia, where you can't trust the leaders or anybody else. In Latin America, where inflation's always been a problem. Doesn't matter where you live. There are two things you send to America if you can. The best metric is that if you're a person with means and you live anywhere in the world, if you can, you send your child to college here.
Hmm.
And the reason that's the best metric is there's nobody anywhere on the planet who doesn't want the best for their kids. right?
True.
We all want the best for our kids. Why would you send your kid here? The only reason you'd send your kid to school here is because you feel like best chance I'm going to get for them is sending them to the States for college. Second most important thing that people send here is their capital. Because for all our faults in an economy or a political system, it's safer to have your money here than it is in any other large region
Yeah.
of the world. And so capital coming in is so mobile. US stocks are different than they used to be. Think about John D. Rockefeller and Standard Oil. It became Exxon. Think about Henry Ford, became Ford. So back in the days of John D. Rockefeller, Henry Ford, if you wanted to be a global billionaire, you had to make something, put it in a box or in a can or what have you, and send it halfway around the world. But today, you can be Google. Today, you can be Amazon. Today, you can be a web-based business, and you've got customers everywhere in the globe who've got that little phone in their pocket, and they can be your customer. Interestingly, I got asked by the BBC the other day. Today is Wednesday, Monday. I do a regular gig.
Oh, your voice
That
just
did we lose you?
yeah, lost your voice there for a second.
Okay,
Yeah.
that's just bad earpiece. So the host on the BBC asked me and said, "Gee, Pope Leo, the new Pope, came out and said he's not too fond of AI. He thinks it's not a good thing." And I thought, well, in 1945 at the Yalta Conference, it was Stalin who said, "How many divisions does the Pope have?" The reality is, it's good that Pope Leo moved from the U.S. to Europe because Europe doesn't have a Silicon Valley. Why don't they? Too much regulation,
Oh,
too little
absolutely.
innovation. But we've got it here. That's a very long answer, but the fact is, U.S. markets are doing well because of our unique set of circumstances that are not duplicated anywhere in the world.
Well, one thing, and you can comment on this because I see things just as a casual observer. Okay, so we had the .com thing back when because everybody's investing in .coms, and some of them were absolutely ridiculous. They're never going to make money. There was one guy who wanted to make car selling national. You can't do that because there's franchises in every state and whatever. And he's going on TV and he's selling this idea to people, and people are investing in him. Had no chance of surviving, no chance of surviving at all. And so consequently, I use the metaphor, the analogy of you have all these horses in a race, and they all have 25 to 1 odds. And everybody's betting on the 25 to 1 odds. Yeah, but very few, yes, one or two of those is going to come by and people are going to become very, very, very wealthy. But the other people that are putting their money into or betting on the other 10 1 in 25 odds are going to be losing their money. And
Mhm.
that is sort of what I'm saying now, because I think you have this, what was it, it's exuberance for AI and investing money in AI. But there's got to be in this whole thing, they're not all going to be winners. And so and you can comment on this because I'm just as a casual observer. I think yes, you're going to see a correction in here. It's not going to be a correction for everybody, but there's going to be some people get hurt with this AI thing, don't you think?
Sure. Anytime there's a new industry or a new technology and there's a rush of capital to invest, not every company will win. And that's actually one of the beauties of our system. What ends up happening is the successful company makes what people want. So
Mm-hmm.
we'll go back to your industry, right? The auto industry. Roll the tape back 120 years to the very early 20th century, and you had a million names of cars out there. I own Hudson's, Franklin. I can't. I own Plymouths, although they're still in business as Chrysler Corporation. I own a lot of cars that don't exist anymore, and there were investors in those businesses. There were lenders to those businesses. Some of
Mm-hmm.
them lost money. What ended up happening was a company like Hudson, which made very large,
Mm-hmm.
expensive luxury cars, heavy cars, lost out to a guy like Henry Ford, who made a 20 horsepower Model T Ford you could buy for next to nothing. He realized make more and sell them for less, and he's the one who succeeded. Same thing will be happening in AI, where whoever makes the product that's best, I better hold my microphone up here. Whoever makes the product that's best and
Mm-hmm.
most often used will win. Some will fail. The big question here is is there so much being invested in AI that the losses will sink some people or some companies? Maybe, but these businesses, the AI businesses, the technology businesses that supply them, are going to be absolutely global businesses. And they will have 4 or 5, 6 out of 7 or 8 billion customers. That's what Google is now. We use the word Google to look something up. We're going to Google it. And so that sort of thing will happen with AI, but some of those companies are going to fall by the wayside. Some people are going to bet wrong and lose, and that's the nature of a capitalist system. It refines the winner as what you as a customer and you and you and you and I want. So is there a risk? There absolutely is, but there's huge opportunity, and that's why there's so much capital.
Well, George, let me take a second here. You can adjust your microphone. It's working. It's working fine, actually.
Okay.
So you don't have to worry about that. But I'm going to take a second here to just do a little break to tell people that we're talking to George Conboy, because I do this without commercial interruption. So every once in a while, somebody tunes in and goes, "Who are you talking to?" We're talking to George Conboy, who's the CEO of Brighton Securities, my personal financial advisor, good guy, and he knows how to craft his business to fit your needs, I would say, would be the big thing with that. So we were just talking about AI. So the thing about AI, I guess one of the presenters at one of the colleges told the kids, said, "Well, AI is the next industrial revolution," and the kids all booed.
Yes. Yeah.
That's really hard to argue with. My daughter is a professional photographer, and she's doing very well. She takes photographs for the New York Times and these very famous people, these people that are actors and actresses. She just did Shakira for a publication a little while ago. I mean, so she said to me, "Dad, when's it going to be where AI takes over my job?" And this is somebody who's very, very, very successful, but they're worried about that. I had a news reporter say the same thing. How long is a local news reporter? How long is my job going to be around because of AI? And I think this is probably analogous to that, but you really don't know where it is going. Now, the thing is that of course AI is going to take a business away from people that are doing like graphic arts and stuff like that. But then again, it's going to be hiring more people to do AI, to develop AI. So where this is going, I don't know. I know the Pope's concern about this, but we just don't know. But I mean, give me your read on something.
So I think about this, and I read a study recently, and a reputable study was done by the Wall Street Journal, and they surveyed a large number of corporations, and about 70% of the corporations said we're more likely to hire more people because AI will allow us to take entry-level workers and give them some software that they can operate. And they, instead of being entry-level unskilled, they're semi-skilled now and can do more. The analogy I use is this. In the days of the axe, you had axemen that would go out to the forest, they'd cut down trees for lumber and for pulp and paper. Somebody invents the chainsaw. And axemen were worried this chainsaw is going to put us out of business because one guy with a chainsaw can cut down a lot more trees than a bunch of guys with axes. That is true. But what ended up happening was the chainsaw made lumbering more efficient. Lumber prices came down, pulp and paper prices came down. More people benefited from lower priced paper and lumber accessibility than lost their jobs as axemen. We may find similar kind of things in the economy with AI. I'll give you an example. Just gave you an example. Another example. So my wife is a publisher. She publishes 4 magazines. She had a little small business, handful of employees, just a small handful of employees. And she literally subscribes to AI, as in she pays a monthly fee, which most people don't currently do. But she pays a monthly fee, and AI is building and maintaining spreadsheets for her bookkeeping. Now, what happened before was she didn't employ people that she discharged because of this AI, but it makes her more efficient, and her staff and she herself can do more with the magazine, sell more ads, publish more pages, hire more photographers to take more pictures, because a mundane clerical task is being done by AI, whereas before it was all human done. So for her, it's an improvement. For every business, maybe not, but some businesses, yes.
Well, it's gonna change the landscape of business. But the thing is that it's nothing to panic over either. It's inevitable. I mean, the famous Henry Ford quote, "You and I are car guys," was that
Yes, we are.
if I asked people what they wanted, they would have said faster horses,
A
right?
faster horse. That's right. Old Henry, he was crazy, but he was a pretty smart, crazy guy.
Oh yeah, the more you learn about Henry Ford, the more it's like talk about coming with baggage, right?
Hmm.
And his papers, his anti-Semitic papers, and the thing. Oh, it's just this guy. You know, I was just going to say this guy's a kook, but aren't all those people kooks? I mean, are isn't Musk a kook? I mean, they're all
Yeah,
kooks. They're all
of
kooks.
course.
It's
But they
like,
have some ideas that are
yeah,
perfect for their time,
right.
and Ford did, and Musk does. Yeah.
Right, right. Well, that is commenting about being an entrepreneur. If you want everybody to agree that you're doing a good idea, okay, then it's a terrible idea. You need the idea that somebody didn't do. You have to differentiate yourself from somebody else, and you can't, you can't. I say this all the time. You have to know what your product is. Your product is not. Pictures on pieces of paper. It's imaging. So, there's the Kodak analogy.
Well,
Blockbuster. Block, yeah,
you'll lose if you're the guy offering the faster horse.
yeah,
Right?
yeah. That's
Yeah.
exactly right. That's exactly right. Not understanding what your business really is. And I see that across so many different businesses. They don't understand exactly what their business is. Their business is, I used to say about our dealership. Our dealership, what we did was we took care of your personal transportation needs, and most of the time that meant we sold you a car or we fixed a car. But sometimes we have to find you some other transportation. You need a 15 passenger van. I don't have that, but I'll go find it for you someplace. But
Hmm.
that's how you build a business. So so anybody who has a 401k, let's see. I'm going to see if I can parrot what you say. Anybody has a 401k, sit tight. Things are going to be okay, and you're going to go through this, and it's going to be ups and downs. If you're looking at the price of gas, when this whole thing gets sorted out, it's probably going to come down quite a bit. Trump seems to be investing in the traditional energy outlets, manufacturers, whatever, which seems to be pleasing the market quite well because it appears as though you can comment on this this eco-friendly save the planet, electrify everything philosophy that we had in this country a couple of years ago is sort of going by the wayside.
Yeah, it was never based on economics. It was based
Right.
on an assumption that
Mhm.
doing X was going to cause Y. In other words, driving your car is going to cause an end to civilization. Look, I can be wrong, and long after I'm dead, maybe driving a car will cause the end of civilization, but it doesn't seem likely. And to try to reorder our entire economy and electrify everything, while at the same time, this would be former Governor Andrew Cuomo trying to move everything toward electrical uses while shutting down a nuclear plant. Now they want to reopen nuclear plants. Look,
Mhm.
you got this conflict here. Just let the market determine what it wants. If people want electric cars, super, buy an electric car. You want a gas car? Buy a gas car. You want a faster horse? Buy a faster horse. But keep the politicians from subsidizing one choice, from making one choice. When politicians decide for us that we should do A or B or C, that doesn't involve the great mass of people saying, I want to buy a Ford Model T. It involves a few
Mhm.
people, like the Soviet Union, deciding we're going to manufacture this consumer product and you'd better like it because it's all you're going to get. And
Mhm.
that never works. Let the market decide and you're better off.
Ronald Reagan, I don't know if we have time on the show for the joke, but do you remember the joke that Ronald Reagan had about the guy who had to order his car? So the guy,
He had oh, in
no,
the Soviet Union.
I have to tell this because this is great because you
Yeah,
touched on the
it's a good one.
Soviet Union. So it's great. He says, well, the Soviet Union, he says it takes you 10 years to get a car. He says you got to go put down a payment, you pay for it, and in 10 years, they'll give you a date that you got to go pick up the car. And he goes to the guy, well, your date is 10 years in the future, January 2nd, on in this year, and it's 10 years in the future. He goes, morning or evening? He goes, what do you mean morning or evening? He goes, it's January 2nd. He says, well, the plumber's coming in the morning.
Soviet.
the old Soviet system, and Ronald Reagan's jokes. God, he was great. I just love that guy. We have about a half an hour of talking to you, which is very good. And I have another guest coming on very shortly. But what are the last words you would like to tell our listeners right now, George?
From an investment perspective, I'm very bullish. Just because I believe in our economy and just because I believe things are looking up doesn't mean everybody agrees with me.
Mhm.
And so the most important advice for any individual investor is make sure you're comfortable with how your portfolio is ordered. If I think 100% stocks is a great idea, but you don't, do what you think will be good. I may be wrong and you may be right. I may be right, and I specialize in being right. But if you aren't comfortable with the way your portfolio is structured, I call it the stone in the shoe problem. It's like having a stone in the shoe. I'm an expert and I'm telling you, just leave it alone. And you might say, well, he's the expert, I'll leave it alone. But you keep walking, at some point, you're going to take the shoe off and dump the stone out. And when you finally do that to your portfolio, it will be at the worst time. So take the stone out of your shoe today. Don't take my word for it. Do what makes you most comfortable. In the long run, you'll be better off.
Well, and I appreciate that about you, because we've gone through some investments and you've said, I mean, it's like the Ford stock. I bought the Ford stock at, whatever it is, $7 a share way back when. And I refused to give that up, because I bought it so cheap, and it goes up, it goes down, it goes up and goes down. But I have a little affinity for Ford though, too, so a little bit of that is because I was a Ford dealer and a car guy. And speaking of car, what is your favorite car that you owned? Tell everybody, because you have really great cars.
I often, people ask me that question all the time, and I say, look, how many children do you have? And they smirk, knowing my next question is, which is your favorite child, right? Because if we have a favorite child, we don't want to say who it is. And so I don't have a favorite car. There's a car for sunny weather and a car to go fast and a car that looks fun, all that. But if I guess I have a sentimental favorite, which is the first car
that's what I'm looking for.
Yeah. First old car I ever bought. The first old car I ever bought in 1991. A 1953 Plymouth Belvedere I bought from a minister up in Irondequoit who was retiring. I still have that car. Just put new brakes on it. I'm going to go pick it up today. And I drive brides in that car. It's all black with chrome and big white walls. It runs well. It's very reliable. And now, 1953? That's 74 years old. That's an old car now. And that 1953 Plymouth, that's my favorite.
Yeah. So I have the two cars. I have the LeBaron that's not worth anything at all. You've seen that car, and I have my Shelby Mustang with 2011s, and I the convertible. And I said to my daughter one day, I always tell this story. You probably remember it because I probably told it to you 12 times. So I said to my daughter, I said, well, I know, the car looks like a midlife crisis. I'm 70, and the car is, just too hot of a car. She goes, no, it doesn't look like a midlife crisis. That is, oh, that's good. She goes, no, it's more like a 3/4 life crisis.
Right. You're not living to 140, Dom. Neither one of us.
Right. You have your children to keep you straight. So if somebody wants to contact you, give us the website address. And
sure, BrightonSecurities.com. BrightonSecurities.com. Absolutely. Right. You'll find us on all the socials. You'll find us on Monroe Avenue. You won't find us in the phone book because there's no more phone book. But BrightonSecurities.com, right. We're there.
That's right. And I have to say, your web portal is really good. I mean, I check my investments every day. It's like I don't do it because I'm worried about it. It's sort of like the Yankees score. You just check it every day. So I check it every day. But your website portal is very, very customer friendly too, as are you. So thanks for being my friend, and thank you for your learned advice. And everybody who's listening, if you want a good fella to handle your concerns about your investments, George Conboy is the guy to do it. Thanks, George.
Thank you, Dom. Great to see you.
Good to see you.
Thanks for listening. You can find our previous shows at nononsenseroundtable.com. Don't forget to like and subscribe, and we'll make more.